I mean, Bitcoin's definitely undeniably the only macro asset, I think.
These founders are effectively selling out their, some of their team allocation, but then also some of their personal allocation, pre-TG or even like post.
Yeah.
Do you have a problem with that?
That if you try to slow down the economy by raising rates, you're actually printing more money because you have to service the debt and you have to pay all these dollars out. So like 5% rates at, $35 trillion, it's a lot of money being printed. So you're not slowing anything down. It's like this.
Welcome back to The Roll Up. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible. The intersection of AI and crypto is moving fast, and soon an agent will be managing your on-chain transactions for you. But without guardrails, it's a disaster waiting to happen. Newton locks agents to your intent with cryptographic proofs and real penalties if they slip. Learn more at Magic Newton on X. Well, Jordi, welcome to The Roll Up again in New York City. Good to have you. It's all-time high day for
All-time
Bitcoin,
high.
which is good.
Yes, very good.
I think Arthur Hayes is calling for alt season after 110K. So we'll kind of see how that plays out. But yeah, I was just curious about your post today. You wrote about how there's a couple chances every cycle or every year to kind of just pick money up off the floor, and the rest of the time you kind of don't do much. And you wrote a post at like 75K saying, like, guys, like, come on, like, this is, what are we doing here? Why is everybody freaking out? Maybe we can just like rewind like a month ago. Tariffs are out. You're sitting there at your desk. What are you seeing? What are you seeing on the Selini side? What made you convicted that was a good spot to get back in?
Yeah, I understood the fear that people were having because what Trump was doing was destroying like the economic value that was being created every day.
Yeah.
But there's only like a few ways that it plays out. And so what I did is just like look at the few different scenarios that could happen. And in each one, Bitcoin was doing very well. So it wasn't like a specific bet on one path. It's like in any of these paths that can happen, the tailwinds are just going to be massive. Because either he's going to force the Fed to come in and just start printing because we were in like a deep recession. Right. And then that's generally going to be very negative for the dollar and very positive for assets that can replace the dollar, like gold, like Bitcoin. So that was one world. We ended up getting the other world I mentioned, which was, Trump would sort of back off. He'd just be forced to back off. Like he'd talk, but then, a lot of people would start walking in his office and being like, hey, Donald, we got some really serious issues. Yeah. So then he starts walking back. So it's kind of what we got. Also, obviously, very good for risk assets. And I think the one thing that is consistent is that the role of the US dollar is top of people's mind, especially internationally, maybe like not just in the US. And, the gold run up has shown that it's possible to get a replacement run up just like gold. I mean, gold has had an amazing run. Yeah. And now Bitcoin, I think, is the fastest horse. And my belief is that it will continue to be the fastest horse and we'll have, many more all-time high days. Maybe like this year.
Yeah. I mean, I think the thing that scared a lot of people here in the States, as well as just probably globally, is that, we've kind of built this empire per se around the dollar dominance and this kind of soft power globally, right? You kind of get to exercise this soft power through these capital controls, tariffs, and it just seemed like Trump was willing to throw that all away for, just to get his way. But yeah, as you said, we saw him back off. And then gold was kind of like the canary in the coal mine for all risk assets. It was like, okay, like people are scared, but it's not about being scared. It's more of that alternative, plan B type of asset. And I think Bitcoin has finally reached that status in investors' minds as well, right? Like Bitcoin is no longer just this pure risk asset. It is, right, for a lot of people, but I think now it's starting to finally hit that digital gold kind of narrative more than ever before.
It's definitely been growing up for our eyes.
Yeah.
It's at a teenager stage now where it really looked like it's going to be an adult. It's getting there. People like Michael Saylor, who have just continued to double down in every possible way, have done quite a lot to accelerate the process.
Yeah.
And I think now it's definitely at the nation state strategy game theory level. Yeah. I think, we're very early in the overheating. We're going to overheat and it's going to get messy, but we're not, it's still cheap. And there's still like a lot of forced buying that's going to happen once, a lot of the sovereign wealth funds have to start rebalancing in.
Yeah.
And so it's going to be, it's quite an interesting time we live in.
Yeah. So we've been having these conversations on the podcast and at these conferences about the game theory of Saylor, and then into Nakamoto was recently announced 21 strategy and these kind of levered debt vehicles to accumulate Bitcoin. You're a big game theory guy, spent a lot of time in poker. From my perspective, it seems like Saylor's got the winning strategy. It's like he was first, he's got the lowest entry point, and he's probably got the most access to capital. And then it just kind of seems like all these piggybacking is like, who can be the closest one to Saylor, because they're probably the furthest from the blow up. But I thought this cycle was going to be predicated on Bitcoin around spot adoption, ETFs, and kind of like more like mom and pop institution buying. Didn't realize, and I think other like Bitcoin maxis and Bitcoiners are coming to terms with it. This is just another debt kind of fueled spiral. So I'm curious what your thoughts are on the game theory of Saylor and his current position is, as well as these other kind of Bitcoin acquisition vehicles are. Like what is the metagame being played here, and then how does that then extrapolate potentially to sovereign wealth funds, nation states, et cetera?
Yeah, these type of MicroStrategy and clones are playing this game where there's obviously always this zero-sum element, like some people putting in money in some form are losing to other people. And there's different players. And all you need to do is just make the people that are losing think that they're winning. And this is what we saw in 2008 with the mortgage-backed securities, and how like those tranches were set up and people were looking at the different tranches. As long as my B tranche and I don't care about the A tranche, you just have to like make people believe that they're getting the good shot. There's this game that I posted about once on Twitter. My game theory professor from my MBA class was playing this game where you auction off $100. Yeah. And people have to like bid how much they're willing to pay. And in the end, people keep bidding up, and you have to pay what you're bidding. So it sounds like a good idea, let's say, to bid $2 to win 100, right?
Right.
But if you have to pay that no matter what, and I just come and bid $3, then you've lost $2. And so it's extremely similar to the MicroStrategy game in the sense that you have like people participating. They make a decision that looks like it makes sense. Like, oh, I'm buying here. I'm getting converted there. Whatever. This all looks good. What they forget is that the game's not over yet. There's going to be like a new guy that's going to come in, and they can issue more stock. They can dilute. And so like, how protected are you in that scenario? Like maybe right now it looks like a good decision, but you're forgetting that like more pieces to the puzzle are still going to come in, and there's flexibility from like the Michael Saylor side to just keep tweaking the game and issuing more and like kind of changing the risk profile. So who are the losers? It seems like, obviously like the dumb money is in essence people buying the stock at a premium. Okay. That's sort of what he's harvesting constantly. There's the underlying value of the Bitcoin. They have 600,000 Bitcoin, whatever it is now. So that's not a weak amount. Yeah. But also the stock is trading at like way past that. And so he can keep harvesting this. So that's part of the dumb money that potentially is coming in. I think, the more sophisticated players that probably are winning are the people doing these, converts, volatility harvesting. They know how to, structure things in a way where they make money. Yeah. I don't know if these copycats can get as much of this retail premium stock buying as money.
MicroStrategy, yeah, because it's kind of like a meme now.
It's a meme, and like how much
Saylor,
how much is there? Like he's on TV. He's really like hammering it down, and he's done it for so long that he shows that he's very good at the alchemy, the financial alchemy. Yeah, it's very impressive.
Like,
yeah,
he's quite the cult leader as well. That guy.
Yeah. I mean, he's done tremendously well. He's kind of won the game. I don't see it going badly in the next couple of years. But as we see with, many cases in history, if someone keeps pressing their luck and pushes the boundaries more and more, eventually they can go over their skis. Usually what you want to look out for is just, the average price compared to the current price. Like, is that starting to get very close to the current price? So, at the time of recording, we're seeing a hyper liquid trader that's keeps sort of pyramiding in more and more as it goes up.
Yeah.
And, I saw that he was getting his average price from $102,000 to $103, $104. It keeps going higher.
Right.
That's a high risk strategy, but
yeah. And Saylor tweeted today that he was buying more now. He's like, if you're not buying Bitcoin as it breaks all-time highs, then there's something wrong with you.
Right. Yeah. Yeah. He has a psychological way of buying.
Yeah.
He's not trying to optimize his execution. He's trying to scare people off from not participating.
Yeah.
Because he's like, I'm not trying to buy the lows. I'm trying to buy the highs.
Yeah.
So I'm going to keep pushing this as far as I can.
Yeah.
What an epic bull poster. Yeah. But obviously, some of this goes against, the sort of ethos of Bitcoin. So it's a bit of a mixed bag.
Yeah, I think the ETFs as a whole are a bit of a paradox in terms of the custody within institutions, and then the network ownership for somebody like Saylor is kind of it's an interesting situation, which kind of brings me to this general landscape as a whole, and a bit more of a broad question for you. If you were to think about crypto's current situation and trajectory on a biological framework level of development, right? Whether it be an animal or an ecosystem, where would you say that we currently are in that kind of life cycle or in that development, broadly speaking?
You mean like what animal represents where we are?
Yeah, or like at what stage of life is this industry in?
It's a very good question. It's hard to answer it. We're obviously through a lot of the early experiments where we've seen, this stuff doesn't make sense. I think we're still quite early. There's a lot of things being tried that also are going to fail. It's quite obvious. And the learnings need to get really absorbed before, the next things kind of develop and kind of get the V2, V3 before. So we're still quite early. We're seeing a lot of new chains still come up, surprising amount of new L1s. Either you're going after this speed game where you're just, still trying to push the TPS. It's not clear exactly what those TPSs are going to be used for. I think the reason why it's very early is because we don't know exactly, are we going to be just tokenizing equities and trying to run NASDAQ on chain, or are we more just going to have a ton of AI agents doing stuff, and somehow they're on chain TE or part of the stack needs to use blockchain for verification, or is for the ZK element. Obviously, you don't want to be revealing everything, only selectively. I think if I would say what's likely is that the AI use case is the strongest for me.
Okay.
I think this RWA one is okay, but it's going to be harder than people think, and people are a bit too hyped up on how easy it is to just bring everything on chain and suddenly get liquidity. It's not that easy to get liquidity and efficient liquidity where the execution is going to be, like these traditional, we're in New York right now. Obviously, this whole city is being built on, creating this financial market liquidity.
Yeah.
It's not as easy as, make an SPL out of it and throw it out there.
Right. Yeah. Yeah. I think we're kind of at close to the maximum peak of RWAs and stablecoins as a narrative kind of cycle thought, but also very early in institutions coming on chain. On the AI side, we went through that first wave the end of last year. It's pretty grifty and AI meme coins agents. But there's undeniable kind of intersections there with regards to agents being able to use crypto rails, using them for payments, for kind of like different, we've had guys on talking about robots and interop for robots in terms of communication as well as payments. So, yeah, I mean, early for sure, but like we're kind of past that. We're past the phase of people not having awareness of what's happening. And I wanted to talk today about this market making game and this kind of like development that's been happening over the last year. I'm just getting very much like the gig is up vibes across the board, right? Like that, like the market, retail participants, exchanges, founders, people are now in the sense of like, okay, like everything's coming up. Everything's coming to light, whether it be the different types of market maker agreements, the different types of payments for different services. I'm very much getting like the gig is up vibes from the space as a whole.
Yeah.
Now you're like in a different world, have a different perspective. What are you seeing behind the scenes with the exchange founder kind of like relationship that with the market makers? Like, is that an accurate statement? Like, is the gig up or is
it's
it
not
far
up.
from up?
It's
Okay.
far from up.
Okay.
So like what you're seeing is part of the healthy, let's say like natural rebalancing, which was people get too short-term greedy.
Yeah.
So you saw this like infamous phrase from the Hayden guy saying like, guys, we're going to max extract on this one.
Yeah.
When that happens, then like usually things get pushed too far. And then once there's a public awareness of it, there's a pushback. And so like those deep excesses usually like get shut down and there's some, so that in that sense, the gig is up temporarily.
Yeah.
I think the greed comes back and people find like other avenues to still max extract because the reality is like there's a good amount of short-termism in the space. Not just in the space, it's a reflection of society. People want to get rich quick, especially like the younger generation. I mean, the more I talk to, this like Zoomer generation, it's maybe because they feel the angst of how quickly things are changing in their lives. Like for us, being around a bit longer, we don't feel this like same, like, okay, by the end of this year, if I don't make it, like, I'm doomed kind of thing.
Yeah.
But they're not very patient. They're not very patient. They want to get it done quick. They want the multi-X right away. And that's been leading to, a good amount of extractive behaviors. And, we obviously saw the Libre situation that was more in the meme coin trenches.
Yeah.
The trenches sort of died after that, like very badly, like everything just died.
Yeah.
And we're starting to see a resurgence now because, as Bitcoin goes up. By the way, I disagree with Arthur Hayes, like this alt season concept, I think is dead.
Yeah.
You just get pockets of liquidity and that's it. Like it'll last for a little bit and, these liquidity waves will happen, but it's not an alt season in the sense of, all these things are going to outperform Bitcoin for months like we had. No. But regardless, so the trenches are, reeling from the max extract situation.
Yeah, like they've got a little bit of hope left. Like it's getting juiced back up a bit.
It's getting juiced back up.
Right now, yeah.
And then similarly, like, you mentioned Web3 port, which is, more on the centralized side and sort of like those games.
Yeah, because you guys were put under scrutiny recently at Selini for the OKX auction stuff.
Yeah, so not under scrutiny. Thankfully, it was like very good news, but apparently from the internal communication of Web3 port that somebody leaked, they're complaining about us putting the right price on the auction.
Yeah.
They're like, why don't you just let people buy at $7 if they want to buy, like, there was about Kaido. Kaido was launching, and $7 is like 7 billion FTE.
Yeah.
Obviously, like very overpriced. But when you get an auction, some people are just, they just put their bids at whatever.
Right.
And it's up to market makers to clear it at a reasonable level. And in a healthy market, they're competing, like us in the Wintermute are just sort of like, oh, you're bidding $3. I'm going to bid $2.50 because I'm still happy with it. And you bid $2.20, whatever. So, this auction ended up clearing around $2, which is kind of what the price is now, by the way. Yeah. And these guys are complaining
that you guys
like, why are you not max extracting from?
Yeah.
So that was interesting to see that internal communication. It's a clear sign that, there are these entities, and I don't think they're the only one. I think there's more Web3 ports out there whose goal is just very short-term max extract. Yeah.
So Maybe you could just unpack a bit what a typical market maker agreement looks like for Selini and for market makers. Like when I'm looking to engage a market maker for a new token launch, what exactly those steps are, and where you're seeing some of the let's just say bad behavior in the market in specific spots, and how you identify that, etc.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
So the typical structure, historically in the market has been this like loan call option model. The reason is projects, they have a lot of tokens.
Yeah.
They don't necessarily want to give out a lot of cash. So what they do is just give you tokens. They lend you the tokens, and now how do you get paid for all the work? Because you need traders and servers and tech, like AWS. You need all this stuff to pay for.
Yeah.
How do they pay you for it if they don't want to give you cash? Well, they kind of give you a call option, which is valuable insofar as it's near the money. If it's way out of the money, it's kind of worthless.
Yeah.
But insofar as it's near the money, what they've been doing is letting you repay back the loan with cash at a certain price. You can convert it. So
right.
Let's say Kaido wants to give you a loan, call it like $250, then that if it goes to $3, you can sort of make
exercise
50 cents.
the option basically, and then
Yeah, I'm not a big fan of this model personally. It's sort of something that has been the industry standard way before even my time working in the space.
Yeah.
And I see why it's there, but as you mentioned, as you kind of alluded to, there are some like malincentives that it creates.
Well, it forces you to dump as the market maker to make money.
It doesn't force you. Certainly, like when it's time to exercise it,
right?
Then if it's in the money, then you would.
Yeah.
So that's true. But there's a lot of other games that we see being played where, people either are trying to influence the strike price of these call options and make the strike price lower.
Like founders.
No, like the market makers are trying to get the strike price. Let's say
right.
For Kaido, I want to make my strike price $1, right? Because then I make more money.
Of course, yeah.
So how can you do it? Maybe you sell a lot of tokens and try to get the TWAP price down, stuff like this.
And then you strike a deal or something after it's down.
Right.
Or you heavy short it and then try to get it or something like that.
Well, you can try to short it during the period where the TWAP gets set.
Yeah.
So we see people doing it.
Yeah.
Now they might say that they're doing it because they want to gamma hedge the option, which means they're net long because they have an option, and so if they sell some tokens, they can balance themselves out and become neutral because they just want to be neutral.
Yeah.
So we see even sort of legitimate firms do this.
Yeah.
But again, it's a bit of a malincentive. So I think generally getting some kind of small token grant to help out with providing liquidity is more aligned way to do it. And we're seeing other structures apart from the call option model start to be done that are just more here's a few bips and help us out.
Yeah.
And no call option games and stuff like this.
Yeah.
But it's tricky because there's reasons why those things are there. Certainly, if you market make a project and it goes up a lot, and you suddenly have to return the tokens and you don't have them because people have been buying them off of you, because that's your job. You have to provide liquidity all the way up. That can be a big exposure as well. So it's not a simple problem to solve. I don't think there is a silver bullet. I've seen a lot of the talking heads on some podcasts try to talk about, there's a solution and just put some disclosures and just do this and it's fine. I think due to the volatility of the asset, it's not the same as traditional, products which trade on DCF cash flows and are predictable. It's quite different.
Right. So and then on the other side of this story is the founders and the OTC kind of stuff happening pre-TGE or even like post-TGE,
Yeah.
where founders are able to just exit a ton of their, there's like a team token allocation, a founder token allocation, and then there's like investor token allocation. But these founders are effectively selling out their, some of their team allocation, but then also some of their personal allocation,
Yeah.
Pre-TGE or even like post.
Yeah.
Do you have a problem with that? Is that a bad thing for founders to do?
It depends how much,
Yeah.
right? Like if they're dumping like half or more of their entire stake, skin in the game,
Yeah.
they're supposed to be the one at the wheel, like being incentivized to keep driving the car for everybody else to tag along.
Yeah.
So if there's no driver,
Yeah.
they've exited and it's just the car going.
Yeah.
That's not great. So, but if they're, like a lot of these guys have been working with like just a salary.
Right.
And, on paper they're worth X, but their lifestyle hasn't changed. It probably is good if they just, get some of their immediate needs covered so that they can just focus on shipping.
Yeah.
Instead of like, how do I get, 100K to pay my rent, whatever.
Yeah.
So insofar as it's like measured, I don't think it's as big a deal. It's just a matter of sizing, I think.
Yeah. So then this must be getting cleaned up then in the coming months to year. Like I would anticipate you've already seen that, start to see that shift. Like where do we go from here with regards to this kind of, I call it like the shadow back office of the space.
Yeah.
Have you seen like material changes, or is it still kind of one and the same as it was, 6 months ago?
Well, the main change that happened for the first time is that Binance started being a bit more interventionist. So they're the ones that, froze Web3 port and then started publicly disclosing that, these guys are doing this, bad stuff, and everyone starts getting aware of it and kind of fighting back against it. So Binance, I would say, has actually been the one player that's changed their perspective. Now exactly like why it is that they finally put their foot down, because this stuff has been going on a long time.
And they've known about it.
You remember like these like TRB charts.
Oh my gosh.
I remember some stuff that was like pretty bad even years ago, right?
Yeah.
So they've decided that they're gonna start saying enough is enough, and I think that's a very good thing in the sense of, okay, like there's a limit to the crime. You can't get too like insane.
Yeah.
And I think like some of these Web3 port players are realizing like they can get seized and frozen,
right,
and they have to be a bit more careful. And also the projects that are associating themselves with those kind of market makers, it's really like quote unquote market maker.
Quote.
They're not really like providing liquidity. They're sort of just tactically manipulating price and dumping tokens.
Yeah.
So that's good, but the end problem is just that the retail is still not doing their homework. They're not like seasoned equity analysts, like checking all the details. They're just buying tokens purely based on seeing it somewhere and hearing about it from some source that's maybe not super clean.
Yeah.
And insofar as that continues to happen, it's not going to change the whole game. People have to get educated at the base level, so there's still going to be an incentive to sell a sucker a vaporware.
Yeah. All right, let's kind of zoom out here a bit of the trenches of the market making world. It can get a bit bleak in there. Last time you were on, we spoke about kind of valuing some of these different tokens. We spoke about Bitcoin, Ethereum, Solana, Sui, Tia, Mantle, some of these others, and just kind of covered on how we're thinking about these. I think it must have been like 6 months ago. The Bitcoin dominance kind of trend was happening, but it wasn't as like glaringly obvious as it is now. And since then, ETH has gone through a whole like, I don't know what to call it, like a revamp, let's just say, in terms of narrative and in terms of focus. Solana kind of has, more or less, I would say, stayed on a similar kind of track. Celestia, Mantle, and some of these other kind of altcoins have just kind of stayed in their own kind of lane per se. But I'm just curious, has your valuation thought around kind of like commodity money or community money, as you described it, has it changed much, or is Bitcoin still this kind of like special snowflake thing, and then we've got all these other assets just trying to grab 5-10% of that kind of remainder of community money left? Yeah.
I mean, Bitcoin's definitely undeniably the only macro asset, I think. And
so ETH has just lost its chance at that. Yeah. Because it had a chance.
It had a chance.
When the ETF, it was It
had a chance. I think the community is just too weak.
Yeah.
Very splintered, not being led
Yeah.
in like a strong, good direction. And then just people kind of falling, just one after the other, just giving up.
Yeah.
I mean, it got so bad that we just got this like monster candle one day.
Yeah.
Because it had gotten like so overhated.
Yeah.
And it's good to see. I mean, I'm still a long-term ETH bag holder, just just believing in the community dream.
Yeah.
So it's good to see the signs of life, but there's a lot of work to be done on the Ethereum side, and it's certainly not a macro asset by any means. It's not brought up in the conversation at all for sovereign wealth funds, wanting to diversify to the dollar. It's not going to be Ethereum.
Yeah.
So it's still competing with Solana. I think this like RWA game and this AI game, they're both going to be trying to be like chains in which these activities are going on.
Yeah.
Solana is much more capitalistic, and they'll do a partnership and they'll put incentives. They structure it from incentive standpoint, while Ethereum is neutral.
Yeah,
I mean, that's
idealistic,
good.
Right?
Idealistic.
Yeah.
Neutrality can be good sometimes. So we'll see which one does better. And obviously you have things like Sui that try to get better technology into the mix.
Yeah.
And then you have something like Celestia. I mean, Celestia has always been more of a infrastructure type of play. I haven't really seen the other kind of end game for it. And then you have things like Mantle, which have realized that the way for them to go forward is actually go straight to consumer, be in that sort of application layer in a sense, not just providing general infrastructure for block space, because that's cool, but like there's a lot of that.
Commoditized in a sense.
Commoditized. So you have to like really have a strong moat and a strength that you kind of create a product out of.
Right.
So Mantle is very strong with their distribution through Bybit and like their DeFi and financial chops.
Yeah.
So it's very much like a banking and consumer play on that side.
Yeah.
Not entertainment, but like more financial based. I know there's like entertainment chains. You have Abstract and Sofon and these ones. So quite different from those. I'm a bit more bullish those and these like pure infrastructure, data availability type of things, which are important, but how much revenue will ultimately go there, and if you're not getting revenue, what's the mimetic value that you're capturing? Yeah.
We should talk REV as well. I mean, I disagree. I think that I think Celestia will do quite well. I think that data availability is very important, but the revenue game currently is just completely subsidized. It's effectively zero by design per se. But the question is, in like 3 years, can that be turned on at scale and actually matter compared to something like an L1? Mm-hmm. And so that's kind of like what we'll see. One thing that we didn't talk about there is Hyperliquid. Yeah. Do you own a lot of Hyperliquid? If you don't mind me asking.
Not a lot.
Do you mind me asking what is your like L1 kind of like portfolio here? Like, what is your...
So like the ETH side, I would say is I just haven't touched it for like a very long time. It's just there. It's a meaningful amount.
Yeah.
I just leave it, and one day if they get their shit together, then I'll be cheering it on.
Yeah.
But I'm not. I would say it's like a 10% kind of thing, right?
Okay.
Vast majority is Bitcoin, some Sol, probably similar, maybe similar to the Ethereum size in terms of just vaguely.
Yeah.
But Bitcoin is by far the largest L1. We have pieces of other things.
Like Sui and stuff like that?
Yeah, a little bit.
Because Raul Paul is very bullish Sui right now.
Yeah, I mean, I don't know that I, take my inspiration from some of these public people necessarily.
So not an Arthur Hayes fan, not a Raoul Pal fan.
I'm a fan of them in some ways,
Understood.
but not following necessarily like their investment guidelines.
Understood.
Try to
make
try
your
to do
own
it directly.
frameworks, right?
Yes. No, and like love for those guys, and
Yeah, of course.
But I think some assets like Hyperliquid, to be quite direct about it, I see them as like there's a range at which I love them and a range at which I don't like them anymore.
Yeah.
So we certainly bought a good amount at around $10-12.
Yeah.
And over 24, over that 2x, sort of like
It's at like 28 now or something.
don't keep a ton.
Yeah.
And it's just based on it's not really hard to do some kind of P multiple on its revenues.
Yeah.
Obviously, it's hard to know what the right P multiple is, but there's a price at which it's very attractive and a price at which there's probably other investments. And so I would say range bound on these. And then there's like tactical opportunities that appear. I mean, we recently got announced that we have done quite a large chunk of WorldCoin, and I think with like this AI revolution that's coming and OpenAI getting into hardware, they just announced that they've acquired John Ives' hardware company for $6.5 billion. Like these are.
So this proof of personhood thing is something that you're excited about, or you think could do well?
Proof of personhood is important. It's not the only element of it. Certainly, like being able to selectively, show that you're a human is part of it, but also more details about yourself. Selectively show that you're Brazilian. That's it. They don't need to know your address. This Coinbase stuff we just saw is another like living proof that all this data not being like encrypted is a huge problem. Yeah. Especially in this age.
KYC is silly.
It's very silly, yeah.
Let's create honeypots of all these somewhat wealthy people's financial information and then just put it in a single server.
And we have ZK technology. Like we can selectively prove these things, encrypt them, and like. Yeah. So insofar as World can capture some of this. I mean, obviously, like they have very complex pieces of what they're building, and there's verified humans, and there's the chain, there's apps, there's this like free tokens they give away to people who sign up. So it's a complicated investment. I'm not trying to make it simple. It is one that we've made in quite a large size. Cool. So
are you interested as well then in Humanity Protocol?
Yes. Cool. Also interested in Humanity. Cool. I think like this general category is incredibly relevant to the latter part of this decade.
I've got a new deal for you that I sourced yesterday. I'll tell you after.
Okay. All right.
All right. Let's talk meme coins.
Sure.
Do you own any meme coins?
I have a lot of Puff.
You have a lot of Puff, right. We spoke about that last time as well, the game theory of Puff.
Yeah, like meme coins, that we've gone through a few cycles with them now, right? And we've learned a lot. You kind of see, unfortunately, there's some that haven't done that well through the test of time. Yeah. Quite a few.
Yeah.
Almost all. Yeah. There's still some that, Fartcoin, people still think it's funny.
Do you own any?
I don't own any. I have at times, thought that it was a good price, but I think on the meme coin side, I've always understood this category of like the cult coins. Like if you can really get like a cult around, SPX, whatever. Even if it's something
Murad
dumb.
Fan over here, huh?
I'm not a big Murad fan, but I think that he's correct insofar as like cults can, really sustain. And we've seen like better staying power in some of these.
Yeah.
Obviously, like a lot of these animal, doggy, cat coins. Yeah. If it's not Doge, it's probably not gonna do amazing.
I agree.
And so just to go into the cult stuff, I think if there's a philosophy, like an idea, concept that people can like collectively believe in, it's represented in a coin. Yeah. Then I think those can be powerful. we've seen something like house coin where
Yes.
people can't buy house, they just buy house coin.
Yes.
It's a bit of like a income inequality, you know, the young
It is
people
like a
don't have.
revolution type of
Yeah.
vibe. Yes.
Like that stuff, like if it can spread,
Yes.
maybe it can do well because it's representing a
Yes.
strong sentiment people have.
Right.
And you kind of need that because you need them not to be like trying to dump right away, but more trying to like have like an emotional connection. So yeah, insofar as like philosophy can come in,
Yeah.
that's one aspect. And the other aspect is like, you know, pseudo meme coin where there's some kind of utility. Now there's everything from like what Trump is doing with dinner and like
Yep.
trying to give people some access in order to buy his meme coin, all the way to like, you know, coins that start getting utility in an ecosystem.
Yeah.
And we're seeing quite a lot of attempts to start, you know, doing that. And I think those are interesting.
Yeah. So barring any, you know, I mean, it's just so hard to think what could happen this year because of the volatility that we've already had from a geopolitical and socio-political perspective. But kind of barring any of like, you know, unforeseen black swans, what is your edge this year for crypto? What is the Selini strategy, or what is your personal kind of outlook on how to maximize returns for the investors who are watching?
I mean, for Selini, you know, a lot of what we do is just market neutral algorithmic stuff. We just trade a ton of volume everywhere and try to keep prices in line and, you know, make a little bit of bips here and there. But we do have, you know, a more like long-term investment and kind of more tactical book.
Yeah.
Look, I think, you know, I used to be a macro portfolio manager, and my macro thesis right now is quite strong that the summer is not going to be amazing. I think we can't keep going because rates are still a huge problem. We're seeing bonds just
Today, 30-year new highs.
new highs. I mean, Japan's like gone
Insane.
exponential, like
Yeah.
vertical. You know, I used to trade fixed income before macro, so like that's the area that I focus on the most, and I can see that there are massive cracks.
Yeah.
I think what we're seeing is like the slow dollar devaluation, but because the Fed cannot ease, they're unable to ease while, you know, these things are happening.
Yeah.
We're not going to get a ton of money printed. It's just, it's going to require something breaking, like either some kind of very bad job data, some kind of slowdown in the economy that's like very, very felt. And so my thesis is things have to get worse before they get really good, where they, you know, the Fed starts easing again, and, you know, it's back to like 2020. If things don't get worse, the central banks are not going to be able to, you know, loosen up because they're looking at these bonds. Doesn't look good. So yeah, it might not be all fun and games for the next months.
So you've been spending more time on the macro side. From one of the posts that I read of yours, you've just been like paying more attention there. You guys have kind of slowed down on Steady Lads because you're kind of, I mean, whether it's your interests spreading out to different fields or just wanting to spend more time analyzing, and so basically where we're at is, even if we get a small 25 bips cut in June or July, we're just not going to get the liquidity flow that everyone's
those
saying.
tiny cuts don't matter.
Yeah.
It's completely irrelevant.
It's like the 1 basis points or 2 down from here.
It really it's not going to change anything.
Yeah.
We're in a weird place with rates because of how big the debt is, that like actually like rates going up or down doesn't matter as much as it used to be. The debt is this weird new parameter that didn't used to exist, where the debt is so big that if you try to slow down the economy by raising rates, you're actually printing more money because you have to service the debt and you have to pay all these dollars out.
Yeah.
So like 5% rates at, you know, $35 trillion, it's a lot of money being printed. So you're not slowing anything down. It's like this, we're in like very late stage, close to like a reset. You know, people call it the fourth turning. Like we're in this like place now with the debt and then like the long-term debt cycle that ultimately doesn't leave wiggle room. It's very likely to lead to like things like financial repression, yield curve control, basically what that means is like the government has to incentivize people to buy bonds because no one's fucking buying the bonds.
Yeah.
And so you have to kind of like force the rotation into bonds.
Yeah.
You know, you pair that with like, you know, the income inequality keeps going up. And unfortunately, like, you know, the administration currently, there's a lot of good and bad things. You know, we like the easing of the SEC regulations, going after everybody. Like
Right.
that's good.
Yeah.
But like, it's not doing wonders for income inequality. There's a lot of like people around, you know, the right places are making a ton of money and it's not filtering through, that's for sure.
Yeah.
So we're in a kind of very volatile stage, and if things start going wrong, they can go quite wrong. So bottom line, I wouldn't, you know, treat the summer as a time to stay max long risk, especially like once you get out of Bitcoin. I think that, you know, general equity markets and sort of altcoins are more like equities.
Yeah.
Right. Pair that with summer's always kind of being quiet because everyone is like not really, you know, everyone's taking a holiday. We think it's gonna be like, you know, a little bit mooted.
Yeah. Yeah. No, because I've been seeing people like say that we're gonna, you know, things are gonna go really well into the next couple of months, but it's you know, you could see it in the market today, but it's just every time, like even today, every time that there's a nice move, it's like something's happening, you know, in the tangential space that is like, oh, today it's the bond yields, tomorrow it's, you know, this country and that country, you know, yesterday it was like Iran and Pakistan or something, right? So it's we're in an accelerated time of volatility.
Yes, it's very accelerated. Everything's getting accelerated.
Yeah, and I'm 25. My generation has no clue like how to kind of, you know, operate through this.
Yeah.
Right. Like a lot of us have just came into the workforce last like 3 years, and we kind of feel that myriad pain that he describes, where it's like housing and your family used to afford a house and a car and a wife and kids, but now you can't do any of it. So there's also that like income inequality thing that you're speaking of, which is. It's just a weird dynamic.
Yeah.
So you think, you know, a bit more pain before we get that actual, you know, letting off of the restrictive financial policy from the central banks.
Yeah, I mean, look, I'm no dollar bull. I think generally like fiat is effed.
Yeah.
So insofar as like that's an inevitable trend,
Yeah.
I don't want to be just in dollars and just holding these things.
Yeah.
So I'm always like looking for an excuse to go into assets, especially things that are, you know, are potentially going to be stores of value.
Yeah.
But bottom line, it does seem to me that, you know, we have to like revisit tough times before the real easing comes in.
Yeah. Well, Jordi, hope you have a great week here in the city. Appreciate you coming out, man.
Of course. Good to see you again.
Thank you.